Hello everyone, it's Professor Choi again. Today we're going to be following up with another video that we did before on how to read stock information. Basically, what do the numbers mean? So last time we went to Yahoo Finance and we picked up the stock of Verizon Communications, for example. And I was kind of reading to you or explaining what all this stuff means over here. All right, so we're going to keep going on Yahoo Finance, and we're going to be explaining what all the different tabs over here mean. So let's go to the chart tab. I'm planning on making other videos on how to kind of read these charts, but basically, let's just read right now what the chart is showing us. I have this sort of predetermined amount of data already, all these chart studies that I have already predetermined here. If you want to create indicators, or if you want to add indicators to a particular stock, you could do it here, or you could do comparisons to the market here. Okay, but anyway, let's take a look at the chart and what all these numbers mean. So how to read this information. So each one of these bars represents the price of the stock on a particular period. It depends on what period you're selected for your chart. As you can see here, it says interval 1 day. So each one of those lines represents 1 day. The price at which it opened for the day is that little tick that you see, and the price at which it closed for the day is the other one. This movement you see, whether it's green or red, has to do with whether it went up or down for the day compared to where it opened the next day. So if you see this little nudge here compared to that little nudge there, if it's higher, this will be green. All right, so get this notch here compared to this notch there, opening on the next day, you see it's higher, it will be green. If this notch here, then the next notch on the other graph is here, then this one will be red. Okay, but basically green means it went up on a day to day, and then red means it went down on a day to day, from one day to the next. All right. One of the cool things about today is, or basically because of computers today compared to say 10, 20 years ago, is that you could actually do all these studies that used to be only for special people with like really big computers. So anybody could basically do this today and look at all this stuff. All right, I'll be trying to make all the videos explaining all the stuff on the chart. If you click right here where it says conversations, it basically tells you what some people are saying about this particular stock. If you click right here where it says statistics, this is where it gets a little bit more interesting. So it gives you a lot more statistical information about this particular company. The number that you see here again is the market cap. Notice that it has all these different dates now for the market cap, and if you pay for premium access, you could get it annually or monthly, so you can see the transformation of the market cap of the company over time. The market cap is basically the amount, the price of the stock today times the amount of stock available. That gives you the market cap. So if you look at all the stock available, outstanding, times the price of the stock today, that is what the market cap is. The enterprise value is the accounting value of the company. So this is what the company says they're worth on their books. The trailing PE, PE stands for price to earnings ratio, or PE ratio. Some people also call it the multiple. Again, this is the price that you pay for the stock today divided by the earnings per share. So it's price per share divided by earnings per share, and it gives you 12.60. A low PE basically means that this company is undervalued compared to another company. Trailing PE has to do with current or previous earnings. Forward PE has to do with estimated earnings. So the price of the share compared to estimated earnings. All right. This is the price per earning growth ratio over 5 years. This is the price to sales ratio, the price to book ratio, the enterprise value divided by revenue ratio, and the enterprise value by EBITDA ratio. Okay? All of these ratios, by the way, are supposed to basically represent or kind of give you an idea of whether a company is undervalued or overvalued, or whether it's estimated to grow or shrink in the future. All right. So let's keep going with all these other cool financial information that we have. This is when the fiscal year starts and ends. This is the profit margins. Of course, high profit margin means the company is making, the revenues are higher than the costs, and they're making money in general. This is the effectiveness of the management team. This is ROA and ROE, return on equity and return on assets. This is a portion of the income statement. Some of the most important numbers here are, of course, the EBITDA. This is earnings before interest, taxes, depreciation. And I just forgot what the A stands for. Amortization, yes. So this is the EBITDA is the earnings before interest, taxes, depreciation, and amortization. And it's basically used as an indicator of profitability for a business. This is a gross profit. This is revenue per share. All right. Now this number right here tells you about the earnings growth, or what, in other words, whether the company's sales are growing or shrinking. And as you can see here, this one's shrinking a little bit. Now this to tell you about the cash position of the company. So in other words, if they wanted to write a check for, say, $1 billion, they have it. That's what this means. This is the amount of cash per share. This is the amount of total debt that the company is holding in their books. This is the debt to equity ratio. This is a book value per share. So again, how much each share is worth in book value after you basically pay your debt, etc., etc. This is the operating cash flow and the levered cash flow. All right, over here we have some trading information. We got the beta. I explained the beta on my previous video. So again, one of the things you want to do when watching one of my videos is you want to basically watch it in order. So this is the second video explaining some of this information. This is a change of the stock price, 52-week change. This is a change of the S&P 500, and as you can see, this stock is underperforming the index. In other words, the stock is not behaving as the index. It's declining in the 52-week compared to the index. This is a high on the 52-week of the price of the stock. This is a low on the 52-week of the price of the stock. This is a 50-day moving average, which is basically taking a moving average of the price of the stock over the last 50 days. This is supposed to be a midterm indicator of the direction of the price of the stock. The 200-day moving average is a moving average of the price of the stock over 200 days. It's supposed to be a long-term indicator. This is the average volume in the last 3 months, in the last 10 days, of how much stock has exchanged hands. This is the amount of shares outstanding. This is the amount of shares are on float. This is the percentage that is being held by insiders. Insiders are basically people who work in the management team, things of that sort, directly. This is a percentage of the shares that are being held by institutions. This is the amount of shares that are short. This is a short ratio, short float. Short as a percentage of the shares outstanding. This is the total amount of shares that are short as of this date. All right. Now, if the company pays dividends, and not all companies pay dividends, then it tells you a little bit about the dividend information here. So you get an idea of the kind of yield that you will be able to get if you buy and hold this stock for a long period of time. Again, of course, this is as always making the assumption that the past in many ways estimates the future. So this is a forward annual dividend rate. This is the forward annual dividend yield. This is the trailing annual dividend rate and the trailing dividend yield. This is the difference between forward and trailing. Trailing is basically explained using current dividend, while the forward has to do with the estimated dividend. As you can see here, there's an estimate that the dividend will go up a little bit. All right. This is a 5-year average dividend yield. This is a payout ratio. This is a dividend date, the last dividend date. And this is the ex-dividend date. By the way, to understand the difference between those two, the ex-dividend date is the date that you have to basically already own the stock in order to get paid the dividend. Then the dividend date is the date you get paid. You need to buy the stock at least 2 to 3 days before this day, this ex-dividend day, in order to get paid that dividend on the day, because it takes about 2 days to clear the purchase of a stock. So that basically means that by, say, January 4th, you need to already buy the stock, and then by January 7th, after it clears, you will already be a holder of the stock, and then that makes you it basically allows you to receive the dividend on February 1st, because this is the day that the company is going to use to determine who to pay the dividend to. Okay, this tells you about the last time the company split the stock and the ratio of the split, or how much of a split is the stock has suffered over time, and this is the last date that there was a split. Now, other numbers that you see down here, for example, it tells you a little bit about the recommendations that people have on this particular stock. Last time I checked, this is done by looking at analysts of a particular stock. This is the average recommendation. This tells you a little bit of a history of where the companies or analysts are basically saying this company is going to do well or not. So you will get either upgrades or downgrades on a particular stock. All right, let's keep going. Talk right here. Click right here where it says historical data. So this historical data basically tells you prices for the stock historically. You can see. All right. If you click right here where it says profile, it tells you basically about the company itself, Verizon Communications, where the headquarters are located. Gives you a bit of a description. If you click right here where it says financials, you could probably do a whole class just on all this information here. So you can take a look at the income statement, the balance sheet, cash flows for this particular company. If you click where it says analysis, this is a number of analysts that are covering this stock. And it gives you all these kinds of estimates for where the earnings are going, growth rates of the company, expectations of the growth rate of the company. This gives you a bit of a view into the options market today. Again, you can take you entire books just explaining that portion there. If you click right here on holders, it tells you about the largest institutional holders of the company, the largest mutual fund holders of the company, and if you click up here, inside roster, for example, it tells you about the largest individual holder of the company on the insiders. And then if you click right here, it tells you a little bit about these insider transactions that have been reported lately publicly. If you click right here, it says sustainability. It gives you a bit of a score on how this company's sustainability is compared to its peers. You see its peers here. You get Verizon. Okay, so this is the how the peers are doing, kind of like the score. Then you get actually how Verizon is doing compared to its peers. Okay, the average peers over here, Verizon, in terms of sustainability, is doing better than most other companies in the same market. All right, so I hope you kind of like my video today. I gave you a bit of an overview of how Yahoo Finance has all this information about a particular stock and how to read it. Thank you for tuning in to Professor Choi. Have a good one.